Hey everybody, this is Matt Thomas at tradingparadigm.com, and today I want to talk about how to get started trading with the right expectations. There's no doubt that most traders get involved in the markets with the wrong expectations. They tend to view trading as some sort of easy cash grab or get rich quick opportunity, and essentially just use markets as a platform to feed their egos and emotional desires. But if you actually want to achieve a consistent and sustainable level of trading success, then random and impulsive trading won't get you there. Sadly, most hopeful traders choose short-term emotional gratification over long-term profitability. I completely understand how difficult it is for the average person to get into trading with the proper expectations because to some degree, we all want fast, easy profits. And since that's what most trading gurus make it out to be, that's what we believe. But these marketing messages that highlight dream lifestyle components are just there to grab your attention and then try to sell you something. The time and hard work required to be a great trader isn't quite as enticing as stacks of cash, exotic vacations, and fancy cars. As a result, many hopeful traders enter the markets based on false promises and misguided perceptions, and unfortunately end up depleting their emotional and financial capital before realizing that what they've been told was nonsense. So hopefully you could use this as an opportunity to discover the truth about trading, and the truth is that it will probably be the most difficult endeavor you ever pursue. So in order to put yourself in the best possible position for success, right off the bat, you have to take full responsibility for your trading process and results. I see so many new traders who are quick to blame the talking heads on TV or the so-called trading gurus who are sending them alerts, signals, and hot picks for their trading losses. And some even blame the market itself for their trading woes. But the reality is that blaming anybody or anything else for your own individual decisions and results is nonsense. These excuses are just a psychological defense mechanism to deflect blame because it's easier to deal with poor results when you don't think that it's your own fault. But all deflecting responsibility does is surrender your power to change. And if you don't change, you'll never become a self-sufficient, consistently profitable trader. So now's the time to stop making excuses, blaming external forces, or playing the victim if you actually want sustainable success. Start holding yourself accountable. So far, we've mentioned process 1 or 2 times already, and that leads us into one of the most critical concepts of successful trading. Focusing on process over profits. There's no doubt that most new traders get involved with trading for the money. They see the slick advertisements and marketing messages from self-proclaimed gurus and so badly want the stacks of cash, fancy cars, and overall lifestyle that they're portraying. But this obsession over profits actually distracts them from what really matters. The process. It might seem counterintuitive, but the less you focus on short-term profits, the more you'll actually be rewarded. That's because if your process is strong, then long-term results take care of themselves. But if you put garbage in, like fake gurus, blindly mirroring alerts, and get-rich-quick programs, then you get garbage out. Inconsistency, emotional pain, and financial losses. Understand that outputs, aka your profits, will derive from your inputs. So make sure that your process is strong. The last component that we'll talk about today for setting proper expectations is the fact that trading success is not a straight line. It doesn't deliver clean, linear rewards like a typical job or career with a set wage or salary does. So if you have some exact number in your head like how you want to make $200, $500, or $1,000 per day like clockwork, understand that trading just doesn't work like that. There will be days, weeks, and sometimes even months when you don't make any gains at all, and sometimes even lose money. From a psychological perspective, weathering these ups and downs is what makes trading so difficult. The potential for incredible rewards within financial markets certainly exists, but the overall growth process will be full of mistakes, losses, and drawdowns along the way. So to wrap things up, becoming a consistently profitable trader is most likely much harder than you realize. If there was one single message I'd want you to take away from this video, it would be this. Trading is a skill-based peak performance endeavor that requires proper education, training, and experience, much like that of a professional athlete. The vast majority of market participants, however, don't treat it this way, which explains the low success rate. So if you want to dabble your way through it with a surface level approach, like subscribing to guru alert services and newsletters, then go right ahead, but don't expect to be profitable long term. In the end, trading is a serious game where only the skilled, self-sufficient individuals survive. For more details and related articles on this topic, you could find links down in the description, and I'll talk to you in the next video. Take care.